Welcome to Bitcoin Escape Plan. Bitcoin is currently stuck in the middle of a key range at the moment, deciding whether we are going to see new lower lows or if we can break past the psychological barrier of the 2021 and 2024 highs. In today's video, we're going to be going over which is more likely just based on the general trajectory of the chart right now. Something really interesting is starting to show up on the chart, so make sure you watch to the end of the video to see all of that information. If you are new here, you can go over to the website, bitcoinescapeplan.com. You can check out all of the previous newsletters that I have. Some interesting ideas for the other correlated assets, as well as Monday's weekly newsletter where I go over all of the key levels that you see in these videos, but instead in your email. I will be releasing the Monday one shortly after uploading this video. All right, let's get into it. 4-hour chart first, as always, just so we have a decent picture of where the price is going to go at the moment. So what we were looking at in yesterday's video was if we could see strength at around the 70.2K pivot level. That's on the daily time frame. For the 4-hour, it's actually at this 69.8K pivot. And as you can see, we struggled a little bit on Saturday and then broke above that and then gave it all up Sunday, essentially. And this new pivot has formed at about 70.8K, but we didn't stay above it, and I don't think it's as relevant on the higher time frames. We'll check that later in the video. So currently we've seen a breakdown here, and then we're looking for strength. We got it. We've now seen the bottom Bollinger Band is starting to slope upward. You can see that. So we had it slope down here and then consolidated as we rose higher before, again, forming resistance right around that 70.8K pivot. And then have broken back below the 4-hour SMA. And the 4-hour SMA is the only SMA that we're actually interacting with at the moment. Every other time frame higher than this, we are still dropping lower, and the momentum is still bearish. But what we really want to look at is this guy here. We want to see, can we get, I don't know if I'm using the right tool for this, can we get strength right at around this level that we're at here? We don't really want the price to break much further below where it's at now, about 67.5K, at least on this time frame. This is the 4-hour time frame. As we zoom out to the higher time frames, it kind of looks like we've already broken it, to be honest. So that is one that I would be paying attention to, is do we see a further breakdown past, really, I would say about 67.2. We have a bunch of candles on the 4-hour that are right around there. So if we can form some support there, we can get a rise higher. This is the most important one, though. This one right here. This is the 4-hour anchored VWAP, currently sitting at about 65.7K. I talk about that in all of my videos pretty much. This is the most important tool, free tool that you can use to get a better understanding of where the price is going to behave. Back here in January, we were talking about how we saw a break back to the top band of the 4-hour anchor VWAP for the first time in several months, I believe since November. Super, super important, but as you can see, we broke down from that level and have continued to break down from that level. And there's nothing really telling us that we're magically going to snap back to that. And quite frankly, it's currently sitting at right below the 96K pivot, about 95.7, and continuing to drop. And the general thesis of this channel, which I'll go over later, is that we were going to see a rise to 96K, and it's just looking less and less likely, unfortunately, as time goes on. So what we're looking for now on the 4-hour specifically is, can we get some strength above that level? Like I said, about 67, 67.2, right around there. If we can wick to there, but close kind of right where we are, we don't want to close much below the Bollinger Band. Otherwise, again, that's going to push us further lower, which we don't want to see. And really, we need to see strength above. On the higher time frames, it's the 64K pivot. The psychological level that we need to stay above is about 63K, that being the 50% midpoint from the 126 all-time high back in October. And that's pretty much it at the moment. You know, this is the one good thing, is this pivot point being pulled on the lower time frames higher to 66K instead of 64K. Technically, could be an indication of support, and we need everything that we can get. We do not want to see the price drop back below this 4-hour anchored VWAP middle band again, but the reality is that now that we've touched it, we are more likely to break it again and to test the lower band. And the lower band is way lower. The lower band is all the way over here. currently sitting at about 35.7K. So in general, the price will continue to be pulled in that direction, which I do go over more in the newsletter today. So let's zoom out. Let's go to the monthly, see what we have. On the monthly time frame, as I said, it's a 64K pivot is the main important one. And again, psychological level that we need to be above is 63K. That again being the midpoint of this 126.2K pivot. Technically 63.1, but whatever. Some numbers can be round. It's fine. And at the moment, we are starting to see more pressure to the downside, back towards that 64K pivot. We do not want to close the month of February anywhere near that 64K pivot. We want to be at the worst right around 70K. Actually, technically, we want to be above about 71K, just to show any signs that we could break back to the 76.2K pivot. But at the moment, it's just not looking like that. It's looking like we need a retest of 64K pivot, and there's only so many more days left in February. Same thing for if we look at the weekly time frame. It's pretty much the same story. We saw on the bottom half of the range is where we actually closed last week, which is going to put pressure to the downside for us this week. So all that we can really hope for is some form of strength. So the wick for last week, the lowest we got was 65K. So it's decently above 64, but not quite high enough above that prevents another retest of that level. So we're going to have to really pay attention to, does the wick close above or below 64K? And does the candle specifically close where in relationship to that pivot does it close? If we close below it, that means we're pushing closer to this 44K pivot. I don't think that we're going to see that overnight. I do think that it would take a bit of time for us to decide on that. You can even see we're starting to consolidate in this range, and it's possible. If you look at the Bollinger Band here, it has been sharply declining. It's slightly rounded a little bit. So that's what we would love to see, is if we can get strength this week, a close above 64K, possible this Bollinger Band starts to round out and continues to round out, or at least flatten instead of sharply dropping. And if it starts to flatten instead of sharply dropping, that gives us permission to consolidate. It gives us permission to try and get the price higher. But again, if we're looking at the actual levels that are most important at the moment, the 96K pivot is the one that I've talked about for months now as what I believe is the actual highest that the price could possibly go in this like Q1, early Q2 period of the year. And then I don't believe we're going to see 100K for the rest of the year. I know, very sad. But the chart is just not telling me that. If we look at the SMA for the weekly in general, which we've been talking about pretty extensively here, this is continuing to get pulled lower and lower down below that 96K pivot, which means by the time that we actually interact with that SMA, we're going to have to not only break through that SMA and the 76.2K pivot as well as the 80K pivot. We still have to break through that SMA before we're able to even test 96K. Which functionally is going to force 96K to behave as resistance instead of support, which again is not what we want to see at this stage of the market if we're going to show any strength. Now, me personally, I am not bothered by this. This does not bother me. My plan for this year is to increase my income, reduce my debt, and then go heavily into debt at the end of the year to buy as much Bitcoin as possible, because I do believe that this is the last cycle that Bitcoin will ever be below 100K. I do not think after this cycle that we see below it ever again, other than maybe whatever, like 96K or 98K might be the absolute bottom, but it's going to be reflected as like a couple hours on the chart. And I'm talking about 2030. Like, this is a long time from now. There's a lot that can happen in the world between now and 2030. So I really think about this part of the cycle that we're in right now as the last best opportunity to buy Bitcoin at relatively cheap prices compared to where it is going to go. If you're following this channel, or if you're someone who's a believer in Bitcoin in general, you've heard the argument that it's going to go to 1 million and beyond. And simply based on the economics of how the world functions, If they continue to print money, then this asset and other asset classes like it, like gold, like real estate, like the stock market, will continue to rise forever. They'll continue to go up forever. So Bitcoin is no different than that. It just also trades 24 hours a day, so it will move quicker. It will react more fastly to market events in both directions. And that's just something that we have to acknowledge, is that I've said it on Threads a couple times. Bitcoin is the punching bag at the moment. It's going to be the first one to sell off because it's the easiest. When people are panicking in the other markets, or even when they're showing strength in gold or SPY, why would you leave gold and SPY, which are very safe, considerably compared to the volatility of Bitcoin? Why would you leave those assets to jump into a chart that looks like this? Why would you do that? Like, nobody intelligent is doing that. And that's why we're seeing this sustained breakdown. And now what we're looking for is we're getting pretty close to, I think about all of this chop in 2024 as this is the ETF buyers trying to gain some position size. They're trying to actually build their cost basis up. And we are now seeing, is the price going to hold at those levels? Or are those people going to lose conviction and either trim their positions or just rotate out of those positions because they essentially held it for over a year and all they did was pay out fees to BlackRock and the other entities? Like, they didn't actually receive any gains unless they sold out in between September and October, pretty much, which maybe some of them did, but a lot of them were buying it in the retirement accounts. That's what Trump was fighting for people to be able to do right before he rinsed them. What a wonderful president. And that's what we need to look for at the moment is, do we have any strength in these ranges? And this is about 55K is the bottom candle close to about 71K, a little bit above 71K, which again, we've talked about multiple times. The important key levels that we need to break above psychologically right now are 69K, which is the 2021 second all-time high peak, and 73.8K, which is the wick in early March of 2024. Yeah, 73.8K right there. Technically, it's actually this one, which is 72.7 is actually the highest candle close. Candle closes are more important than wicks, but sometimes I think the psychological level ends up being where the price is being pulled to, even if it doesn't stop there, even if it stops a little bit below it. Psychologically, that's where we want to go. The same way where this 98K peak or 97.9K peak in January, nobody cared about 97.9K. What they cared about was 100K. And what the chart reflected and what the market is now assuming from that is, oh, we lost 100K. We can't keep 100K. The price is going to continue to break down because of that psychological failure. That's what's happening at the moment. So we're kind of caught between that 100K psychological barrier as well as the previous all-time highs. And if we can't hold above the previous all-time highs, price will continue to break down to find new lows. I've talked about this in multiple videos. If the news companies could only run one story for all of 2026, that story is, how low can Bitcoin go? I think when you use the news in general to make your investing decisions or trading decisions, you have to be really careful, and you actually have to think about who benefits from this specific story. The story that they were running all last year from about the middle of the year to the basically until the price started to break down was Bitcoin will never go below 100K again. It'll never go below 100K again. And as soon as I read that, that gave me complete conviction of, oh yeah, the price is going to break down really hard below that level. And I actually called that out in July. That was my first thread that started to go really viral. Was I told people basically, I don't care how high the price goes, it will go back below 100K. Which I don't think was that revolutionary, but people were freaking out about it on Threads at the time. A lot of people were calling me a scammer and all this stuff. And here we are several months later, it's significantly below that level, and it will continue to break down below that level. So how low can it actually go? We've talked about this in other videos, but there's some evidence. This is the 44K pivot. That's the lowest one that we can see at the moment. What we really want to see here again is if we can hold some strength at 64K pivot, that's going to push out how long we have until we break down to that 44K. And I'm thinking that we find some support before that, mostly just, again, because of these ETF buyers in here. There's a decent amount of support from about 55K, and even in here at like 62, still a decent amount of support. And if we really zoom out and we go back to the highest closing candles for 2021, then the actual closing candles is about 65K and about 60K. And that's pretty much where we just touched. So we just touched 59.9. That was the low point, I believe now 2 weeks ago in early February, which is below. It's below those first peaks in April of 2021, which is not a good sign. That's not really what we want to see here for strength. So what that indicates to us is that price is going to want to go to these lower levels, and it's just going to continue to look for, where are these points of strength on the chart. Like this is 48K. There's a decent amount of price action in 48K, and even in 2024, this low here is 49.5K. So psychologically, again, that's what we're going to want to see is, does that form as a floor where the price will not continue to break below that? And when it does, or when it touches it, that's going to put a lot of pressure to the downside. Not quite as much as if we look at. So I talk about the Anchor VWAP a lot, mostly on the 4-hour chart, because we interact with it a lot more often on the 4-hour chart. On the higher time frames, it's really just useful for timing bottoms. Like as you can see here in 2022, we just barely break below the top band, and we're nowhere near the middle band. If we go back to 2018, pretty much the same thing, where we break more significantly below the top band, but are able to hold above the middle band. And then even in the March of 2020 COVID crisis, we still are well above that middle band. And I would expect we are never going to touch the middle band ever again on at least the higher time frames, as like we already talked about. On the shorter time frames, the 4 hours specifically, it's much more common that we're going to see a breakdown not only to the middle band, but below the middle band is what we actually expect on specifically the lower time frames. But on the higher time frames, the price is definitely showing strength. As you can see, this is continuing pretty much. I think of it as like a bell, where we have this time period where the price is rising and the Anchor VWAP is also rising, and then it flattens out and starts to flatten and just like continue to consolidate as the price is dropping lower. And as you can see here, we actually are still climbing on the higher time frames. Like it's still going higher. So it's not quite at the point where it is ready to fully break down. It does seem like it stays flat like we would expect that it would flatten pretty much through the end of 2027, essentially, before it starts to rise by the pre-halving year, or the halving year rather, which means we expect it to rise and then consolidate and flatten all the way to 2028. That's a long time. So what if the price continues in the same direction that it has been? What that means is it's going to continue to break down towards that level, which at the moment on the higher time frames is about 28.9K. Let's call it 29K. I don't personally believe that we're going to see a significant touch this time. Again, the overall trend is that we're showing more strength over time. So we will be pulled toward that level. I don't know that we will break that level, but I do expect we will at least get, like, say, to here. Well, this is actually lower than I believe. This is 31.8. This is more likely to me. This is 36.9K pivot. And the levels that I continue to talk about more frequently are 34 to 39K. This is 31. Let's see where we can find evidence of that. So this is the weekly time frame. We spent a lot of time at this level. Yeah, 34.5. We spent a lot of time at that level. We showed some strength above that level here and then broke below it. So for me, I think that 34K is going to be crucial we may get a wick to that, but I would imagine we get a candle close above that on the weekly and monthly time frame, and that allows us to actually start going in the opposite direction. Now, again, that won't be until either the end of this year or the beginning of next year. And if we look at the last time that Donald J. Trump was president, we saw it did not break down as quickly as it has now. Well, technically, it's essentially the same. It's actually more violent in this period. We've seen about a 52% retracement, whereas I think this was like 72% or something like that here. And then it consolidated for a while before it finally broke down and went below it. And then it actually sharply recovered in 2019, like pretty aggressively recovered it in 2019, which I do see as a possibility as well for 2027, because we have the stablecoin bills that should be fully live by then. They're still really taking their time with that crypto market structure bill because the banks do not want to give up one of their biggest like profit builders, which is high yield savings account. Why would I, as a bank, want you as a person to go put your money elsewhere instead of having it sit here with the bank so I can continue lending it out at 10x value of what you actually have in? Like I talked about this in yesterday's video. JP Morgan Chase took like a $780 million fine for manipulating the commodities markets from 2008 to 2016. There are trillions of dollars in the commodity markets. Why the fuck would they care about a $780 million slap on the wrist? Like, it's ridiculous. So that's what's happening at the moment, is they are really trying to prevent crypto companies from giving you yield from your stable coins, and really just from you having access to better options through DeFi than you would through traditional banking. Traditional banking does not want to give that up, rather than just integrating DeFi into their systems. They will over a long enough time period, but they're going to hold on as long as they can, and they're going to focus more on, they want people to increase the amount of transactions that they're doing. Why do they want to do that? Because we have slowly shifted who the actual customer of American debt is. So I've talked about this more in the yen carry trade and a couple other videos, but what's happening globally at the moment is most of the buyers of US debt are no longer buying that US debt, and they're actually selling that US debt. So what does that mean? That means that the value of the dollar is going to continue to drop because we need to find a new buyer of the debt in order for basically for the dollar to have any value at all, for the treasuries to have any value at all. We need to have a strong economy. We don't at the moment. We have a fairly weak economy. And until we have replaced the buyers of that debt, we can't keep, the economic machine running the way that it has. And it'll continue to form pressure basically on the other markets. That's why we're seeing gold rise, is because the other markets are seeing pressure. So at the moment, what that is going to do when we have the stablecoin bills live is it's going to shift the buyers of American debt from other countries, which previously Japan was one of our biggest buyers of debt, and now they're selling it off so that they can strengthen their own currency. So we actually are shifting that from the buyers of our debt being countries to now it's going to be normal people. It's going to be people in Africa who have access to JP Morgan Chase coin or an equivalent that allows them to have a one-to-one peg with the US dollar that is going to retain value more than their currency is, even if the US dollar continues to get devalued. So once that happens, any bank that is issuing a stablecoin has to have it backed one-to-one with the stablecoins, which means that's who the buyer is. The buyer is indirectly going to be the banks from the people who are doing business with it. That's why they want to prioritize you doing as many transactions as possible, because the government, and I don't know if they wrote this on a cocktail napkin or whatever, but I'm sure that you won't find this in any official records. The banks have a deal with the government where they need to get people to continue to buy US debt, or the whole thing explodes. The whole thing does not function anymore. I don't think that really happens until the 2030s or 2040s. That's going to be a crazy decade. But at the moment, that is the primary narrative that is actually going to pump money into the markets in 2027. And let's go take a look at that. I really think that's what's happening at the moment, is they're stalling on that crypto market structure bill so that people have hope of maybe liquidity is going to come back. Maybe we're going to see new all-time highs. Completely ridiculous. The total smokescreen. That money is not going to flow into the markets until next year. As far as I understand, the bill doesn't actually go into effect until January of 2027, and that's when money would start to flow into the market, is from that point onward. So I do think it's possible that, like 2019, that we see an early rise and a peak. And if we just kind of extrapolate where that would be to, so in 2019, went to about a high of 13.8, which was actually very, very close to this guy. That's also where this candle closes. So it kind of was like after the breakdown had happened in the early part of the year. So if we were to extrapolate that to where we are here, that would pretty much be the 96K level. That we're going to see, I would assume, another rise to around that level. Probably not until next year. I know that's not what people want to hear. And again, if we think about it just in a narrative sense, 2026, what they're going to talk about all year is how low can Bitcoin go. In my opinion, the narrative for 2027 is, can Bitcoin reclaim 100K? So it's, I think, very possible that what we're going to see is a continued breakdown and consolidation pattern throughout the rest of the year. And then once we have found that local bottom, which again for me is somewhere between 34 and 39K, though potentially it could go lower, then we'll start to see a rise towards the upside and another possible failure at that 96K pivot before we're able to actually move past it by either end of 2027 or into 2028. I would imagine there's probably going to be a decent amount of hype around the halving again this time, same as in 2024. Mostly just because more newcomers are coming into the markets, and it's just one of the easiest narratives to actually get in front of people that makes it different from other assets. So it's going to have some hype probably in early 2028 that again may cut out some of this volatility to the upside. I think that's a big reason we saw the initial peaks in 2024 and off of the election. I think there's a big reason why we didn't see 130 and 150, because we had already had all the excitement earlier in the year. So there was no reason for us to get a full parabolic top. So what we can sort of expect is if we continue to consolidate and then eventually rise into that pattern, 2027 is, I think, a really good possibility that we're going to see another failure at that 96K pivot, slight lower again. I'm not expecting another COVID or another black swan event or anything like that before we're able to actually break out and continue past it. So what does that mean for you watching this video, a subscriber of Bitcoin Escape Plan? What that means is, me personally, all I'm focused on, again, increasing my income, reducing my debt, and then swinging hard on my debt at the end of the year to buy as much as possible. I really think that is all that matters. You don't have to use that strategy. If you're someone, you probably make more money than with me if you are watching this channel in general. I'm just a normal human being. But for normal human beings, that's our best opportunity, is to be able to buy heavy when it counts the most. And when it counts the most, in my opinion, is going to be later this year. Because already once they start to print those stablecoins, the banks are directly incentivized to get you to have as many stablecoins as possible. They're not even going to want you to have money in your high yield savings anymore. They're going to want you to move most of that money to the stablecoins because it'll be more liquid. It'll be like more rapid that they're able to actually process transactions. If you think about it in terms of like a wire transfer, there's a hefty fee. And you got to wait like 3 to 5 days for you to get your money. Whereas the stablecoins, they're going to be able to do it for basically no fees at all. And you're going to be able to move large sums of money almost instantaneously. So that's going to change the banking system overnight. And again, that's why they're incentivizing people to spend more with them as opposed to keep it in one place. They want it moving. Because that means that they're going to have to continue to buy more US debt in order to keep the thing moving. Because again, if I have $500 billion worth of stablecoins, what that means is I need to have $500 billion worth of US treasuries to back those stablecoins. So that's really, if you think about the psychology of why they are offering it the way that they are, it's from the Federal Reserve. It's from the government. They need a buyer of US debt or the whole thing crumbles, which, I mean, foreigners want, but like nobody that's running America wants that to happen. They're doing everything that they can possible to keep the ship from sinking. I do think that is going to end up flowing back into Bitcoin. It's just not going to be something that happens overnight. And there will be significant pain before then, because those same rich people that are controlling the markets are going to want those prices. I mean, who doesn't want Bitcoin below 50K? Like, I don't think anyone watching this video should be upset about the fact that it's going to drop below that. If you're someone who was, paying attention to my threads or anything last year and you were stoked when the price is above 100K and you're buying above 100K, which, by the way, I don't think I bought any Bitcoin in 2025 other than maybe here. I did. Okay. I did buy it in March, April. But other than that, I didn't really touch it. Like I was waiting to see where we peaked to decide if I was going to take profits. I took a very small amount of profits. I'm not really one of those people who like sells the majority of my stock and then rebuys them later, though. I mean, that is still the best strategy, but I think it depends on your income. If you have really good income, cool, do it because you'll be able to buy it back later. But if you're someone who's just like a normal person working paycheck to paycheck, then I don't think that there's any reason for you to sell the majority of your Bitcoin. Like maybe take a small amount. I really think in general, you should only sell Bitcoin if it improves the quality of your life. You shouldn't just sell it because the price has moved. Like that's not a good enough reason. It has to have a tangible impact on the quality of your life for you to sell it. Because otherwise you're holding an asset that a company like JP Morgan Chase is desperate for you to let them hold on to. We're moving in that direction where like the unsecured credit is going to shift towards collateral backed assets. That's going to be the major focus in the coming decades. So that's the context that you need to have in your mind as the price continues to go lower over this time period. Is it's not a bad thing for the price to go lower. It just means that you're able to stack more Satoshis than you would have been able to last year, and that it'll have a more dramatic impact on your future. So to round out the video, that's really, I think the most important thing that you need to keep in mind is if the ETF buyers totally capitulate, we will see a breakdown much further towards, like I said, closer to 34 or 39K. I would imagine those same individuals are probably going to step in hard at that time, but it'll kind of be the stable coins that actually fulfill that, because it's still going to be one of the easiest places, like for people to move money. Once those stablecoins are live, I don't think that they're going to function the same way that stablecoins do now, which is typically, the markets will go into Bitcoin first, and then it'll flow into the altcoins, and then all of that will flow into stablecoins, and the stablecoins will continue to rise, which currently at the moment we're actually seeing them flatten out a little bit. And then it'll go back to Bitcoin and then back to altcoins and then back to stablecoins. Like it's pretty normal that's how the cycles have transgressed. What we're going to see now is once we actually have that in the banking system, that money is not necessarily going to flow to Bitcoin or to altcoins immediately. It's going to flow to real estate, to stocks, to anything else that the bank can get you to buy. However, they are going to be incentivized for you to buy Bitcoin because you're going to hold it on their platform. And again, they're just going to rehypothecate it. They don't give a shit. They're just going to do that. They're going to take it and then they're going to lend out 10 times as much money. And it's one of the hardest assets in the world. So the banks are directly incentivized for the price to continue to go lower so that their high value clients can buy an obscene amount of it. Once their high value clients have an obscene amount of it, they're going to lend it to them. And then the cycle is just going to continue. I do think that the next all-time high is, again, probably not going to be as parabolic as past ones. I don't think that we can anticipate that for every cycle from now on. I think Bitcoin gets more boring, and it would be a mistake on your part to ignore it because other things are going to go up more in value. I don't personally think that is what you should be focusing on. It's literally why I've made a brand and a YouTube and all these social channels around it, is because there's so much noise in the markets that's going to tell you should buy this other thing, you should buy this other thing, or this is going to outperform Bitcoin, or this does this better than Bitcoin. That's a calculated effort to make sure that you don't have more of it, period. Like, yes, I, as a holder of Bitcoin, am directly incentivized by you and everyone else buying a ton of it because the price will continue to go up, especially once we see a supply shock, which I believe probably is somewhere between 2028 and 2032. We'll actually see the real effects of the supply shock. And that will possibly cause the price to go parabolic in a way that we haven't seen since the early days, because there's just not going to be enough Bitcoin to go around. Already the ETF buyers and the digital asset treasury companies are buying up effectively all of the active supply that is being mined on a regular basis. So there's going to come a point where there's just not enough Bitcoin for people to buy. Like there's just nothing left for people to buy. That's going to continue to increase the demand while reducing the supply. And it's just going to shoot the price up long term. So I think you really need to have that in mind as the price continues to go lower. It doesn't mean that you need to like go dramatically into debt for this asset, though I am planning on doing that. Can't wait. It's going to be awesome. But that's kind of what you need to be prepared for, is that once we see that bottom swell, the price is never going to go there again. It's not going to happen. The 100K narrative is super, super important. The same way that, that $100 was, the same way that $10 was. And those are so far back that it's like really hard to think about that in the context of where we are now. But psychologically, once we have crossed that barrier back to the upside after we've broken it, like I said, I think that it's unlikely that we see that price ever again after that. So to wrap up the video, that's what I would be focused on for you personally. If you are a subscriber of the newsletter, if you are a subscriber of this channel, is you need to have a plan for not what happens tomorrow, not what happens for 6 months from now. Although I do think you should have 6 months from now, like drawn in your calendar, whatever that is, like September, August, October. That's going to be really important for you to have as much cash as possible, in my opinion. You can do whatever you want. It's not financial advice, but you want to have as much cash as possible for Q3, Q4 of this year. That's going to be the times where you're actually able to get the best deal for your Bitcoin. And then you just need to hold on to it after that. That's the whole point of the Bitcoin escape plan, is you need to hold on to as much as you can while the rest of the world is trying to convince you to sell it, while the rest of the world is trying to convince you that it's not that valuable or that other assets are better. Governments are buying Bitcoin. They're not buying XRP. Major corporations are buying Bitcoin. They're not over-indexing and leveraging on XRP or Solana or fucking, Fartcoin. like a lot of the liquidity over time will flow to number one. Just like Coca-Cola, just like Apple and Samsung, like the money is going to flow to whoever's at the top, and the top is still Bitcoin, So that's what I'd be looking for at the moment, is we want to see strength above the 64K pivot, just to show if we can get that relief rally. Otherwise, we are going to continue to break down lower. Doesn't really matter to me if we break down lower earlier in the year or later in the year. I would prefer later in the year, because then I'll have more cash to put towards it. But you need to be prepared for either opportunity, where we see a sharp breakdown in the early part of the year and you just buy as much as you can at that point. But it's likely we're going to see a couple more fake outs along the way. I do think July is going to be really important. That White House event with the UFC event, that quote of give them bread in a circus and they'll never revolt. I really, really believe that is what that is that we're going to see the relative highs in stocks and real estate and mostly stocks and real estate, I would say, the primary ones. We'll see some type of peak between July and October for those before a major breakdown further. And gold will rise that whole time. I think the gold is quite possibly going to rise into 2029, 2030, just based on my study of previous cycles, which I do have other videos about that on the channel. You can look up gold and you'll find that video. But that's what we're looking for right now. Can we hold strength above 64? Do we have any hope of going back to 96? I think less and less over time. Do we have any hope of going back to 96? Which is very sad. I know we all want to see price back above 100, but you should just be thankful that price is dropping lower. Focus on getting as much cash as possible so that you can dollar cost average into it or lump sum at appropriate times. I would be careful with leverage at this cycle of the market because, again, there's going to be volatility to both sides. And I do think it's very reasonable that we actually at least see 80K again. I think 96K is becoming less and less likely, but 80K I think is very much still on the table. So just don't get wiped out right now. So that's all that matters. That's all I'm going to say. I'll see you on Wednesday. Thanks for watching.